Hello, this is Super Informed Radio, a UniSuper podcast. My name is Lyndon, and we are coming off yet another month that has kept investors very much on their toes. And, if it felt like things could maybe be starting to settle down in May, well, markets clearly didn't get the memo. We are recording this on the morning of the 1st of June in 2026, and we've really seen a bit of everything this month. There's, of course, ongoing global uncertainty. There's plenty of noise around interest rates. We've had the federal budget, of course, and as well as a few reminders that volatility has not gone anywhere just yet. Thankfully, though, we've got UniSuper's head of fixed interest, David Colosimo, here to try and make sense of all of this, and he spends way more time thinking about all these things than I do. So, David, welcome.
Good to be here. Thank you, Lyndon.
Now, David, last month when we came to talk about Australian shares and US shares, it was very much a case of, US shares being very strong and Australian shares kind of seeing only modest gains. We've had a bit of a repeat of that in May, haven't we?
Yeah, true, Lyndon. US shares were up another 5% in May. That's very strong coming off the back of a 10% gain in April. But Australian shares, they were actually up just less than 1% in the month. So it's really been an incredibly divergent performance in those last couple of months. Australian shares, they're actually still 5% below their pre-war peak. You compare that to the US, the shares there are at all-time highs and actually 8% above the pre-war peak. So that rise in US shares really relentless. Now, when you do invest in shares, you do learn to live with volatility day to day, week to week, up and down. But for US shares, the last 2 months have just been one-way traffic. If we look at last Friday's close, the US share market has now had 9 consecutive up weeks. Now, I've gone back on the nearly 100-year history of S&P indexes, and that's only the 14th time we've had 9 consecutive up weeks.
Do you think we can get a 10th week, David? I mean, I know, I'm always after a prediction from you.
Well, so to see a run of up to 10 weeks, at least 10 weeks, you actually need to go back more than 40 years to 1985.
1985, back to the future, David. Anyway, now last month when putting the strength of US shares into context, you were talking about US reporting season and the AI trade. Is all that still at play this month?
Yeah. So as you said, reporting season started in April, continued into May. Now, before reporting season started, analysts were predicting earnings growth of about 12 to 13%. So the actual earnings do usually beat expectations. So more realistically, that was about 17 or 18%. So that already would have been a really strong outcome. Now, reporting season, though, was even stronger than the usual pattern. Right now, first quarter earnings growth looks to be about 28 or 29% in the US. You really only see that sort of growth rebounding out of a recession when there's been depressed earnings. But to see earnings growth so strong of what's an already high level, that's almost unprecedented.
And all of that strength, David, was it all in tech?
No, well, all sorts of companies were beating analyst estimates, but yeah, when you do the breakdown, the broader tech sector has earnings growth close to 60% now. But even in non-tech, earnings growth of about 10%, that's actually still pretty solid.
And so how did all of that come through in share prices?
Well, the strength in share prices in May was very tech-focused. So as I mentioned at the start, US shares up more than 5% in the month. But of the 11 subsectors in the market, only 3 of them were actually higher. Now, one is the tech sector, obviously. That was up nearly 16% in May. Another is consumer discretionary, but that's really dominated by Amazon and Tesla. So in my mind, that's really still tech. If you look at the smaller companies in the rest of the sector, mostly they were down. And then the final one is healthcare. 2 of the larger companies there, Eli Lilly and Merck, they were up 18% and 8% respectively. They did have some good headlines about their drug pipelines. But if you look at all of the other 8 subsectors, they were down. And in particular, energy shares there were weaker. We did have a 16, 18% fall in oil prices during May.
Now, one sector or theme that surely is not down is AI, David. Now, that's still pretty dominant at the moment, isn't it?
Yeah. There's been a lot of skepticism over the years about the durability of the AI boom. But actual AI usage is now skyrocketing. According to Google, their token use on their systems is up actually 7 times in the last 12 months. So the market's really focused on the shortage of compute rather than being worried about excess investment. If we look at the combined capital expenditure of the four biggest AI spenders, so Amazon, Google, Microsoft and Meta, that's expected to surge 98% this coming year to $715 billion US dollars, which is actually more than 2% of GDP in just four companies. So nearly as much as the entire US spends on building houses. Now, the companies that supply into that investment, they're all doing very well. NVIDIA is obviously the biggest. It was up another 6% in May. Micron was up 88%. Advanced Micro Devices up 46%. Qualcomm up 40%. So a lot of big moves.
It kind of begs the question, David, like who is the biggest beneficiary of all of this? Is it mainly the US or?
Well, not quite. I think the biggest beneficiary title goes to two other countries, and that's Taiwan and Korea. Now, Taiwan has actually a smaller population than Australia, but now has the fifth biggest stock market in the world. It recently passed Canada, the UK and India. Its share market is 80% technology. More than 40% is just one company, TSMC, manufactures the world's best chips. Now, that helped drive Taiwanese shares up 15% in May and 50% so far this year. Taiwanese GDP is actually running at around 15% growth. Meanwhile, in Korea, shares there are about 50% in technology. 40% is just two stocks, SK Hynix and Samsung, both also make chips. Now, between those companies, they helped drive Korean shares up 28% in May and more than 100% in the first 5 months of this year.
Now, David, we've been hearing a lot about data centres recently and, rolling them out in Australia and the like. Are there many companies in Australia that are benefiting from all this AI investment?
Well, we do have NextDC. They operate data centres here, continuing to win big contracts from the hyperscalers. It was up 7% in May. But otherwise, many of the companies in our IT sector, they seem to be more at risk from AI rather than boosted by it. WiseTech this month was down 16%. But perhaps the biggest impact is actually an indirect one. The mining sector provides a lot of industrial metals, especially copper, that does feed into the AI capex cycle. BHP and Rio were up 16% and 11% in May. Sandfire Resources was up 20%.
And so outside of AI, David, what were the big themes in Australia?
Well, to me, there are two other big themes in the Australian market. The first was that Australia's major banks were down between about 4% and 7% in May. We did have bank reporting season early in the month. That was a bit disappointing. And then between rate hikes and those capital gains tax changes you mentioned in the budget earlier, they're both expected to weigh on bank earnings as we move forward. And the second one is that unlike in the US, where analyst expectations of company earnings are still being upgraded, the earnings expectations for Australian companies in aggregate are now clearly in downgrade mode. So we're seeing lower estimates for earnings. Now, we did have quite a few big companies announce earnings downgrades during May. We had CSL, ASX, Brambles. Their share prices were punished. CSL down 22%, ASX down 24%, and Brambles down 27%. Relatedly, we did also see Tabcorp down 32%. It did announce that AUSTRAC has launched an investigation into its anti-money laundering practices.
David, we are starting to run out of time. We haven't even spoken about events in Iran yet, even though it's dominated over the last 3 months or so. Are there any observations that you would make at this point on that?
I don't know what I can say, Lyndon. It just feels like the past 2 months, the market's been expecting that an agreement is just around the corner, and it's always just seems to be around the corner.
Just around the corner.
But now that may actually be true, though as we're recording today, I don't think the interim deal's been finalised. But of course, we always get back to what markets care about is how much oil is flowing through the Strait of Hormuz. Now, if and when a deal is reached and the strait opens, I think the backlog of ships, it'll start to clear relatively quickly. But there is still a big question about what happens after that. Because if a deal is reached, all that allows for is more time to negotiate the final sticking points. So the Strait could really close again at short notice if those negotiations break down. Now, given that vulnerability of the Strait, you've got to ask yourself, shipping operators will obviously be happy for their oil-laden ships to leave the Gulf, but will they send their empty ships back to get more oil and risk getting stuck again? I'm not sure. And then also with the oil wells, you can't just turn those on and off like a tap. They do degrade each time they're plugged and reopened. So again, will oil producers be comfortable to bring supply back online when the Strait could close again really quickly?
Okay, David, let's look ahead to the new month of June. What are you looking out for?
Well, if you recall back in February, Lyndon, I did highlight that the race was on between the three big private companies to be the first to list. So SpaceX, Anthropic and OpenAI. It does look like Elon Musk's SpaceX will be the first. They're expected to list on June 12th. Musk is actually looking to raise $80 billion. That's actually less than 5% of the $1.75 trillion market cap he's aiming for. But even that really small slice of the company, it'd easily be the largest IPO in history.
Now, we've all heard, a lot about SpaceX over the years, but I'm kind of interested to hear from you, David. Like, what do you think of it? Like, what can you tell us about it?
Well, it's a couple of different businesses, but the best part of the business is the Starlink satellite internet business. It is a market leader, but to me, the whole company is coming at what's a very high valuation. Now, normally if you're looking at value, you're talking about a price to earnings ratio, but SpaceX doesn't even turn a profit, so you can't really talk about that. But its listing price will probably be close to 100 times sales. Now, if you think about NVIDIA, that's only 20 times sales at the moment, so 100 times would be pretty rich. Now, one thing, though, in SpaceX's favour is that the NASDAQ has changed its index rules. So 15 days after it launches, it will go into the index, also at a much higher weight than the shares that are available. So for any of those managers managing to the NASDAQ index, there'll be quite a bit of money chasing a really small number of shares. And then, of course, after SpaceX, there is also talk that OpenAI are working with their bankers for an IPO, for a listing, and that could be as early as September.
Before we finish up, David, central banks?
Yes, our own RBA, they've delivered 3 consecutive hikes now. They meet again on June 16. Now, the minutes to their last meeting, they gave a pretty clear indication the board thinks it's time to sit back and assess the impact of the hikes they've already delivered. So I'm actually pretty confident they'll hold steady in June. It is also actually possible that we may have even seen the end of hikes. We just have to wait to see how the data pans out. But in the last month or so, there was some weak employment data, some softer than expected inflation data, so maybe reduces the urgency for hikes. And after those 3 hikes we've seen and the capital gains tax changes in the budget, I'd expect also that to take a bit of the wind out of the housing market. And when the housing market is weak, that could temper the need for further hikes.
And now coming to the US Federal Reserve, David, there's now a new chair of the Fed. He was installed recently over the month?
Yeah, so June 17th will be the first meeting for that new Fed chair, Kevin Warsh. Now, while President Trump, he was vocally arguing for lower rates during that selection process, but it does feel like quite a bit's changed over the last couple of months. Again, I'd see the Fed is clearly on hold at this meeting, but markets actually now expect rate hikes are more likely this year rather than those rate cuts that President Trump's looking for.
Very good. All right, David. Well, let's finish there. Thank you so much for stopping by, as you always do, and sharing your insights. We will see you next month to do it all over again when, of course, it will be the start of a new financial year.
See you then, Lyndon.
And that is a wrap for today. Remember, you can find us and subscribe wherever you get your podcasts, or simply check unisuper.com.au/podcasts at the start of each month. Now, I mentioned just there that a new financial year is just around the corner, meaning that the end of the current financial year is upon us. So if you're wanting to make additional contributions to your super before the end of the financial year, check our website to make sure you're across all the various payment deadlines to make sure that those contributions actually count. And we will pop a link in our show notes to the relevant webpage there as well. We are UniSuper, the place where bright minds and passionate people strive to think great and create a future worth retiring for. If you'd like to learn more about our investments, visit unisuper.com.au. Thank you for listening, and we'll see you next time. This podcast is general in nature, and it doesn't take into account your financial situation, needs, or objectives. So before you make any decisions about your super, we recommend that you seek financial advice first. Also, make sure you've had a read of the product disclosure statement and the target market determination that's relevant to you. They are all available on our website. It goes without saying that the past performance of any investment options that we talk about isn't indicative of their future performance, and it's worth noting as well that just by talking about certain companies, we aren't endorsing them for you to include in your own portfolio. Also, probably not a bad idea to mention that certain information contained in this podcast may include forward-looking statements, and we obviously don't guarantee that those statements will eventuate. And lastly, UniSuper has no obligation to provide updates or changes to the information in this podcast.